Hi, this is Randy Finney with Right Side of the Chart, and this is a market recap for Monday, October 8th, 2018. We're going to start out here with a weekly time frame, just soon work our way in, but this all ties together. I know I've covered all these various time frames quite a bit, but let's just review what happened last week, because really what I'm seeing on the weekly and daily charts, play in a lot to how I will interpret the analysis on the intraday charts. In other words, there's some bullish developments that set up, and I pointed out today on the site in the trading room, and I can't remember if that was in the video I did earlier today, the public video. But how far those bullish developments play out really, I think, have to do with what happened here. So let's start out here on the weekly chart. This is a 10-year weekly chart of QQQ. Shared it many times. Shows all the divergent highs in the past decade, followed by double-digit corrections. Fast forward to today, we had, or at least in 2018, we had a divergent high right here, back on the week ending March 16th. That led to a 12% drop. That set us up with this wedge here. We pushed up, made another divergent high. It just really simply extended those previous divergences. I'm talking about the momentum indicators, the PPO in this case, making lower highs versus prices making higher highs. Same with the RSI. You have a lower high. So, and it's confirmed, as I mentioned a couple weeks ago, we had that bearish crossover. And as I've always say, divergences themselves are not a buy or sell signal. However, they are an indication that a trend change is likely. What are your buy and sell signals? Well, that's what we had here last week, as I covered then. We had a bearish engulfing candlestick on QQQ. That means the body of this candle engulfed the body of the previous one, two, three, four, five candles. So that in 1 week wiped out over a month of gains, or prices, if you will, in the market. And so far, and what I like to see, whether I'm trading on a 60-minute time frame or daily, bearish engulfing candles are topping sticks. You want to use them towards the end of an uptrend, not just in the middle of nowhere. And when you get them, I like to see follow through confirmation with another red candle. Two is even better. Now, keep in mind, all that matters on a weekly chart is a weekly close. So this is Monday today. Anything can happen between now and the end of the week. As of now, we have some additional confirmation in QQQ with a red candle. But again, this daily candlestick, or I'm sorry, this weekly candle here can and will change by the close on Friday. So we'll have to just continue to monitor that. Below here is the trend line, the primary uptrend line that we're looking at. That comes off the mid 2015 lows. That would give us a more powerful sell signal, a weekly close below that trend line, or an impulsive weekly break where it looks like we have very little chance of closing. And of course, this 40-week moving average, it's the same as a 200-day moving average, does a bang-up job of defining uptrends and downtrends in a lot of tech-related stocks. QQQ, a tech-heavy index. Apple does a really good job of defining the bigger trends. When prices are above it, the trend is bullish, and when below, bearish. And as I said, I like the fact these come in together, just as they did back here in 2015 when we broke and had the biggest correction throughout this bull market. Qs dropped 26% from highs to lows. They dropped more than the NDX itself, of course, but that came, as you can see, if you look closely, right, we had a big impulsive red candle, weekly candlestick break and close, first one in a while below this comparable uptrend line, comparable to the one we're at now. And then that was followed by more selling. We managed to close the week positive. It was a big intra-week reversal here. But again, we took out that 40-week moving average as well. Momentum took us a little above it, then we dropped back below. And this was a choppy trading period, but again, that's what I'm looking at now. And again, let's look at SPY. Now, SPY is doing better, and that's usually the case. QQQ is not as constant, it's not as diversified. It's mostly tech stocks, 60% or so technology, doesn't have financials. So here you have the S&P 500, which has both your tech stocks, Apple, a lot of the usual suspects you'll find in QQQ, especially the top holdings. However, it lacks financial stocks, and the QQQ does. This one has financials. The S&P 500 has your steady Eddie dividend-paying stocks. It has defensive stocks like utilities. It has REITs. So what's going to happen is, in an uptrend or a bull market, SPY will underperform, but you have less volatility, and it cuts both ways usually. In the financial crisis, the S&P 500 fell 50% from highs to lows, and that was because the banks imploded. But that's rare. Usually, you'll see the Nasdaq 100 considerably perform to the upside and downside. So, where are we at on this? Well, we have this trend line. Now, we already broke the the comparable trend line. I just showed you the one a minute ago on QQQ that came off the mid 2015 lows, but as I said, that the NDX, the Nasdaq 100 here, I'll just show it to you instead of telling you about it, didn't have that same trend line. We had a different trend line right here. It came off the early 2016 lows. Let me color it different for you. And that is because, as I said, the NDX is the actual index that QQQ tracks. And QQQ as an ETF had a flash crash on one day here on this weekly candle that took us down and extended that trend line. So you really want to erase that. What really happened with the index, again, it did, those were legitimate prints in QQQ, but you can see right here, this is where that trend, for all intents and purposes, starts from the early 2016 lows on both S&P 500 and the Nasdaq 100. Nasdaq NDX, as I just showed you, QQQ is now flirting with that trend line right there. We're close to it. And then this is the primary bull market uptrend line below, similar to what I showed you here a minute ago on SPY. Let's get back to that one. So where I'm going with this is SPY has already, and I mentioned that way back here, SPY broke below that trend line back in March, has been back testing since, started to roll over. At the time, I had laid out a scenario of a potential one more thrust up to do this, to put in a divergent high. It took quite a while to do so, but we have that divergent high now. And just like in the NASDAQ 100 or QQQ, we have that bearish engulfing candle there, engulfed several weeks of trading there. And we closed flat today, so stalemate, if you will. Now, you can see we have this potential or pending bearish cross on the weekly. We have to see how this week finishes. So this week has a lot to do. The bulls could potentially stick save this market. I'll tell you, I don't think it'll happen, but anything's possible. If you're a dip buyer and you're bullish and you think the market's going to new highs, I'll give you levels, which I think are key support and resistance levels, and you can decide whether to step in and go long there for a swing trade or wait to position short on a break of those levels. So what SPY really needs to do right now, we can't really say this is anything more than a pullback. And I do still think we'll get a reaction off these intersecting support levels, that uptrend line, the primary bull market uptrend line. And I have a level here, which is right about, let me give you the crosshairs there, about 280. So that's what I'm looking at. So I see a little more downside, and let's now zoom down to the shorter term charts. Here's a level I showed for a while. This is a trend line that only goes back to the early April lows, but we have quite a few reactions on it, this yellow trend line right here. And you can see this sell-off started with a break of this minor uptrend line. That's the one I had been highlighting for weeks, watching that, waiting for the SPY to confirm the sell signal that I already had on, or the breakdown, I should say, on QQQ. Finally did, and we've moved pretty impulsively lower since. But we hit it. We hit it on Friday. You can see there that candlestick pretty much touched it at the lows on Friday. We pierced it briefly intraday today, but we closed back above it. So right now, the SPY is above this trend line. What I think is happening, and I'll tell you now. Since we're on a daily chart, this is a good time frame to talk about. All right, so we have a lot of sell signals. A lot of the sell signals I was looking for on the 60-minute and daily charts, even more importantly, one now on the weekly chart. So I believe there's more downside to come, and I believe there's more downside by the end of this week, that soon. But I do think from where we're at right now, we may be in that period I was talking about before, the point of recognition or WTF moment where POR or the bulls in those long that are dip buying realize all of a sudden the dip buying strategy is not working, and that's where you get that next slide down, the impulsive selling. I think that's still coming, but it's probably going to be tomorrow or maybe Wednesday. And why do I say that? Usually, and I had a member in the trading room bring this up and I concurred, usually you get in these sell-offs like this, here's a pretty decent correction that happened back here in June. You can see some red candles, 3 red candles, and then you had a period of couple area of consolidation, and then a big, that was one of the biggest down days in a while in SPY. So you usually get, even in corrective phases, if you know basic Elliott wave, it's at least an ABC correction, and that's just a corrective wave within a larger uptrend. Right here, you can see we had you had some impulsive selling down to this point, and you zoom in closely there. Let me do that for you. Probably should give it a clean board if I can find one. I've got annotations all over here. Okay, so here's March right here. when we had a pretty sharp sell-off in the S&P, and you can see there it is. So after a few days of impulsive selling, the market took a breather. Dip buyers stepped in, some shorts that were happy to get some profits, especially if they've been beaten up shorting the market they cover. Whatever reason it is, usually you don't see. This time you had a straight down right here, a nearly straight down, and that was because this was not I don't want to use the word unprecedented, but an unusually strong uptrend. This was a blow off top that came after a prolonged uptrend heading into the January 2018 highs. We were already very overbought, very extended. In fact, I pointed out at the time, trying to recall which indexes, I believe all of them. I looked at QQQ, S&P 500, Russell 2000, the Nasdaq, and on some, if not all of those, it was the most overbought we had ever been in history, as far as I could go back. I went back 20, 30 years, but I'm going to guess some of those indexes didn't exist before that. So, S&P 500 did. So point is, we were already overbought and we had a blow off top. That's why there was no room for error. When that bubble popped, it went straight down. So for the most part, and that was a sharp, fast correction. But again, I'm not digressing. I'm trying to let you know that it doesn't happen in every instance, but usually you have this, at the very least, a midpoint consolidation about halfway through or so, at least after a few days. And I think that's what's happening here. So I wanted to talk on that, mention that as where I think we're at right now based on everything I'm seeing, these divergences and the breakdowns. Uh, would indicate to me that we're going to see more downside. And whether we're up tomorrow, whether even hold up into Wednesday, certainly a possibility. I can't tell you when it'll continue, but I can tell you levels where it might continue at, and that's why I'm doing this video. Here's a 60-minute chart on SPY, one I've been highlighting recently. We came close to that trend line. In fact, I have a couple different draws. We hit right on it. In fact, that's what I just showed you here on the daily chart. So I would just have to tighten that up. There it is. That's the same trend line right here. You can see it very clear on this 120 minute chart, meaning every candle is 2 hours. Reactions there. So we tagged that level, and that's where we reversed. So we hit support. We were oversold. So we got a bounce, and again, it was pretty much priced in the charts. At least we were at support. I shouldn't say it was, you know, a done deal, but we were at support, and I shared this on the site today. And that was public content too. It was posted on the front page. It's general market analysis. It showed this 60-minute. We had a downtrend line. We had bullish divergence right here, double divergence really. We had divergence at this low, got a little pop. We went lower. The divergence simply extended and then started to play out for a reversal. Played out. We broke out, and before we even got there, I listed these as my potential bounce targets. And that's just, here's the takeaway. If you're looking to, whether you took a long position, you want to swing trade it up, or you're looking where to short, I think, and it's not a very large range relatively speaking, but it's a good size range at least relative to the move down. So that would be my uppermost bounce target right there, a little above 290. You can on SPY, you can see that's the 61.8% Fibonacci retracement from the move down here to the highs, from the highs to the lows. Those are fib retracements here. I'll color them blue. They'll stand out a little better. There it is. And you can see I have a cluster, two support levels there that run right around with that 50% fib level. And right now, and this was price resistance, I put these up first. 288.23, you can see it captures these reaction highs, and it also, probably not by coincidence, at least not from my experience, comes in right around just a hair below that the 38.2 fib, which is usually the minimum retracement on a kickback rally, if it is just a counter trend rally. So there it is. Those are your levels. You can replicate them by putting fibs up or replicating the horizontal levels. I, I'm leaning towards the shallower bounce. There's a couple things that when I look at this chart, again, this is a 15-minute chart, but I look at the trend indicators, and I use, whether in a 15-minute, I'll use a MACD usually in lieu of a PPO. They're virtually the same, and if you don't have a big big price swings, you can use a PPO and a MACD on this 15-minute chart, and they'll mirror each other for the most part. It's the longer term charts. I think PPO has an advantage over the MACD. But what I was getting at here is I like to use that 9 EMA, the lighter line. When it's above the zero line, like it was from here to here, the trend is bullish. And when it crosses below, it tells you the trend is bearish. Right now it's below. Very often, not always, but very often, that zero line will act as resistance on this signal line, the 9 EMA. So if we bounce up, we're almost there now, or if we reverse tomorrow, um, that will keep that trend bearish. The other thing is, there's a lot I want to get out in this video. It's time frames. That's why I started with the weekly and daily to show you those bearish developments there. Bullish developments on the shorter term time frames fail or often have a much higher failure rate if this is if we're in the early stages of a larger correction to come. What you can expect is bullish chart patterns to either not play out, either fail or break out, but then fall shy of expectations. In other words, we've been in a rip roaring bull market for years now. Usually you get this kind of divergence on a 15-minute chart. It's like go long, you're not even looking at retracements, you're looking at the thrust to the next move up. Where that's a good buying up, trying to grab an arrow tool. And, eventually you work your way up. Of course, you zigzag, but then you take out the highs and you go into new highs. So right now, and we'll know that when we see it in the next few days here. If we get a pretty impulsive reversal, we come back down, this breakout fails, we, move back down below where the lows today, then we're probably heading lower, and that's where that flood of selling will probably kick in. So there's SPY and bounce targets on the 15-minute chart. Here's QQQ, a very comparable pattern there. And you can also note on the volume down below, if you can make out those volume bars. Here, I'll color them up a little bit for you. Let's see. Well, something's not working. The volume bars didn't change colors. But what I was trying to show you is that if you can make it out, there's a huge surge in volume, and that could be a near-term selling climax, but it's only a 15-minute chart, so I'd like to see a selling climax out on the daily or at least a 60-minute chart. Either way, there's our downtrend line, the divergent low one, little pop up to that 180-ish level. I think I pointed that out recently, or several. It was support before, and now it's resistance. Failed there, came back down, put in another divergent low, you can see, and we broke out. But the bounce in QQQ was much weaker. These tech stocks, the big market-leading FANG stocks, which I still think are an overcrowded trade, they are underperforming right now. And you can see it with the Qs down 0.6% today versus a flat close on the S&P 500. So there it is. If we lift from here, these are my potential bounce target zones. To fall shy of even that minimum target there, about 180.50, would be pretty darn bearish. And I mean, when I say fall shy, another impulsive move down to significantly undercut today's lows. You can see this PPO trend indicator is still bearish, as it was bullish here. Once in a while, it'll give you a little whipsaw. There's a little whipsaw signal, but for the most part, it does a pretty good job. And let's see what else I have for you. This is a 60-minute time frame just to look at those developments, because this is usually my go-to swing trading time frame. What am I noticing here? Well, we're oversold, but as I say, oversold can and often does become more oversold, but especially if this is the early stages of a deeper correction. Just like bull trend, overbought tends to stay overbought, become more overbought. So oversold itself is not a reason to position long for a swing trade. Maybe you get a bounce, and that's what we had today. You can only get so stretched. You can see the PPO is also curling up, poised to make a bullish cross. If you want to know what I think happens, just based on my experience with this, if this is if those daily charts and bearish developments play out, we'll get a kickback. Whether that was it today, at most to backtest this trend line right here. Here, let me color that line different. I'll change that to yellow. Should stand out. All right, so there. We have that trend line. At most, I would expect a bounce to that level. Not saying that we can't go any higher, just if we do, then my read on the charts is wrong. And reverse there. I would favor us reversing shy of that level and then doing something like this. Here, let me clean out that mess for you. Let me slide this over here. And that would give us, and I may have already mentioned this before, do something like this. Set up some bullish divergence down here on the 60-minute time frame and with the Qs playing out something like this, a little bounce, another thrust down, might even come in quite a bit lower than this. I'm not doing it to scale here, just showing you the divergences, how they would look. So the PPO coming in like this, and then putting in bullish divergence, setting up for a swing trading up. The downside targets, I've mentioned before, we have this uptrend line here. We have this uptrend line, same uptrend line. It goes back off the, let's see, yep, the early 2015, or mid 2015 lows. That's a minimum target. So when we come back in on this daily chart, that, and I think intraday what'll happen, again, it's just my guess. It gets hard to make these micro calls, but this is what I think might happen. Once we take out this 178 level, and you can see that was support, and we closed on it today. We come down here. I think intraday will probably undercut that trend line, come down around this 169.60 level, and then snap back up and close on it, and then maybe get a reaction there and a little more upside, a little consolidation before that trend line eventually goes. I do favor that trend line going again. It's sometime here in the fourth quarter. That could be tomorrow, or that could be in December. Right now, I'm looking near term, and I'm looking at a market that's getting a little stretched, but keep in mind, stretched on the short-term time frames. We are not oversold on the daily, far from it. We get oversold, especially if you believe this market has a lot more up to go. That's when you want to start stepping in. Oversold is rare in a bull market. When you get it, it's almost as good as a buy signal in itself, because oversold, and you can do this on your own chart, go back for the last 10 years, oversold on the daily time frame, you usually get those one and done readings. So I just want to point out that we're not oversold as much as we've dropped so far on QQQ. There's still downside left before, excuse me, before we even hit that 30 level on the RSI. And again, if you want to talk about not being oversold, look at the SPY, the S&P 500 tracking ETF. The RSI is only at 43. It's just below the halfway point. We're not even close to being oversold. Again, if you get oversold, and that's why I think there's more downside based on the sell signals we had. We get oversold, and again, let me caution you, just because I said a minute ago, if you believe this market's going much higher, and then you want to step in there. I don't. I think this oversold reading that will be coming up will probably become either more oversold than those previous readings, stay oversold for a little longer, or maybe we get eventually we have a lift up in the RSI and then put in another divergent low on the RSI, a second oversold reading. But I just want to say that that's where I think things are going. But again, if you're a dip buyer, here's opportunity number one. I pointed out this trend line. You could have stepped in today, and maybe we go up from here. Opportunity two. This is the next support level, but I still think by the end of the year, we come and we retest those lows back from from earlier in the year. And the thing about it, remember, guys, if I'm right, stocks fall a lot faster than they rise. So you can get there very quick. So you have to have your ducks in a row. If you're bullish and you're buying these dips, just don't get married to them. You set the appropriate stops in place, quantify your loss, identify your price targets, and if you're looking to short some more downside, or you're already short, do the same thing. Make sure your stops are in place and in line with your price targets. Meaning, if you're shooting for a move down here, you can give yourself a wide stop. But if you're trading off these intraday charts that I'm posting, trying to make these trades, then you're targeting 1, 2, 3% moves in SPY, then your stops are going to be a 1% or lower stop. Okay, and to wrap it up here, a quick look at the futures. This is S&P 500 E-mini futures. This is a daily time frame. Here's that secondary or lower benefit of the doubt trend line that I had. And you can see we, just like Friday, when I zoom in really tight here, you can see we pierced it intraday, but we closed back above it. And as I've said many times, the only thing that matters on a daily chart is a daily close. Intraday breaks of a trend line or support level are common, and so you don't want to jump the gun. Again, commensurate with your time frame. Swing traders usually use the daily charts as their time frame. I like to use the 60 minutes out to the daily, and then those weekly charts. Those are really good for trend trades, where if we get those long-term sell signals, that's when we can finally take some shorts on the broad market or individual stocks and tuck them away for longer. Or remember, the right side of the chart, on short trades, we're short Netflix, we're short a lot of things, and I list multiple price targets, and Netflix is a good example. We shorted it earlier in the year. I had, I think, three price targets. I'm going from memory, and when we hit my first target, we went a little beyond it, and then I posted, I'm closing the trade out early because I saw some developments in the chart. Some markets weren't confirming more downside. And I saw some bullish developments and expected a bounce in Netflix, covered that short there and closed the trade out, went long, but then we reshorted it the other day. And so far, just like the last time, almost perfect entry. But my point being to that is I have those multiple targets. And if this evidence on these charts start to confirm the longer term bearish case I've laid out, I will then personally and both on the site, emphasize that I'm targeting those longer targets, and sometimes I'll even add additional targets to a trade, whether it's a long side trade that's really looking good. I might add higher price targets, or on a short trade, add lower price targets if I think it's going lower. And so right now we closed above the daily, above support. And we also hammered right off. I had this level highlighted before. What was that? 286, 66.50, and you can see that doji, this long candlestick right here, we hammered right off that support level. And again, it's not an arbitrary level, pretty well defined. It was resistance back here, support, these previous reactions there. So right now we need to take that out, and I think it'll happen. I think we'll get that this week. If not, then support held, and we maybe rally for a little while. Who knows? Maybe we go on to new highs from here. But right now I think we get minimal upside. Probably break that. And print a daily close below that trend line. And if we can print a daily close below this level as well, this horizontal price level, or basically today's lows, that would be pretty bearish too and indicate there's probably more downside coming. Um, Now let's look at the E-minis. I'm sorry, the NASDAQ NQ E-minis, the NASDAQ 100 futures. There was that trend line breakdown back test. This is similar to what I was showing, highlighting on the 60-minute chart. We had the primary trend line break. We back tested what seemed like forever. It was a month or so, and then finally broke down with impulsive selling once the S&P 500 broke down and confirmed it. So these both gave us sell signals right around the same time. It was the most objective short entry we've had on the markets for quite some time. Let's just say that. And this lower line here, this support line, I'll try to give you a number there, 73, 73.64-ish, give or take. That's a pretty decent support levels. You can see there's a reaction high, a bunch of reaction lows. Most recently, these reaction lows there. So we managed to close back above that after breaking it intraday. So again, these are levels pretty much today's lows. If they get taken out, this breakout on the 15-minute charts will have faded. You can see the negative divergence down here on that daily chart. Let's look at a 60-minute chart. This is the same, very similar to that 15-minute chart of QQQ I told you. So not a lot more here. Maybe one more chart and we'll wrap this up. There's the 60-minute chart of ES, the S&P 500 E-minis, and you can see it reversed right on cue. I had this support line here since at least last week, 2865-ish, and you can see that's where we stopped today. In fact, it was defended successfully with three different 60-minute candles. You can see 1, 2, 3, and then finally we started moving up. But we were pretty much, and these are futures, so they're trading. Think they've opened back up. They closed for a little bit today. But either way, we closed or we're on those right now. So we'll watch this. And, if we pop above that, which I can easily see in the overnight session, I mean, this can go either way, but there's pretty decent resistance. This line just overhead here. So watch that. If we pop up there, that's resistance. Maybe we fail. And again, line up the overhead targets on SPY, QQQ, ESNQ, and that'll kind of gauge you, give you an area to gauge where you can maybe scale back into some shorts if you covered today, or if you don't have any positions right now and you're looking to short this market on a bounce. Okay, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.